Most investors look at Nvidia and think of a simple story: AI chips, explosive demand, data centers, growth. But Nvidia's latest 10K has more than one story hidden inside the pages: legal, technical, and financial information. And that is the part almost nobody wants to read. I went into the filing and I found one line that changes the question. In fiscal year 2026, Nvidia invested $17.5 billion in private companies and infrastructure funds. Up to that point, it could look like a normal strategic investment. But pay attention to this, because this is where the story starts to change. Some of those investments include the companies that develop AI models and purchase Nvidia products directly or through cloud service providers. That changes the question, because Nvidia would not only be selling it into the AI ecosystem, it would also be putting capital behind some parts of that same ecosystem. Now, be careful with this part. This does not prove fake demand. It does not prove manipulation. It does not prove that Nvidia's story is broken, but it does prove something important. The relationship is not simply seller and buyer. There is a second layer: Nvidia capital entering the ecosystem, companies inside the ecosystem using Nvidia products, and AI demand that may be driven not only by external customers, but also by a network of investments, infrastructure, strategic commitments. And here comes another layer. Nvidia itself warns that many of these investments are illiquid and non-marketable. In other words, these are not public stocks the company can easily sell tomorrow. They are long-term bets. Some of those companies may not become profitable soon. Some may never become profitable at all. And Nvidia clearly says that there is no assurance it will realize a return on those investments. So follow this thread. The question is no longer just how much is Nvidia selling. The more uncomfortable question is how much the ecosystem that buys, uses, or drives demand for Nvidia products is also being financed by Nvidia. But the filing does not stop there. There is another piece on the map. To support complex data centers infrastructure, Nvidia provided $3.5 billion in guarantees related to land, power, and shell capacity to early-stage companies. That matters because artificial intelligence does not scale with chips alone. It needs power, land, data centers, financing, infrastructure. If Nvidia is helping guarantee part of that infrastructure, then the company is not only participating on the AI boom, it is also helping build the conditions that allow that boom to continue. That may be smart, it may be strategic, it may strengthen the ecosystem, but it also makes the story less clean. The simple version says Nvidia sells chips because demand is exploding. The filing shows a more complex version. Nvidia sells chips. It invests in companies inside the ecosystem, and it provides guarantees to help expand the infrastructure the ecosystem needs. Those are not the same story. Here is the point. This data point matters not because it destroys the Nvidia thesis. It matters because it forces you to look beyond revenue growth. Remember this: Nvidia is not only capturing the artificial intelligence boom, it is also helping finance parts of the ecosystem that make that boom possible. That does not prove that demand is fake, but it does prove the story is more complex than just selling chips to customers hungry for artificial intelligence. If your entire thesis is based only on AI demand, data center expansion, and revenue growth, you may be ignoring the financing layer that supports part of the ecosystem. The crowd sees one clean story: Nvidia sells into AI demand. The forensic auditor asks another question: how much of that demand is also being supported by Nvidia's own capital, investments, and guarantees? The headline tells a simple story. The filing shows a more complex one. This is Renzo Market Lab. We don't follow narratives. We audit the numbers.